The UK is set for a major shift in its wage structure. Prime Minister Keir Starmer's government plans to raise the national living wage to £12.70 per hour for workers aged 21 and over, effective April 2026. This 4% increase is a central part of the government's economic strategy, aiming to boost earnings for millions of low-paid workers. For a full-time worker, this means an annual salary of £26,416, closer to the national median income than ever before. The goal: make full-time work, provide a more comfortable standard of living, and reduce in-work poverty. The move follows a previous increase in 2025 and comes amid speculation that the government may soon align the minimum wage for younger workers with the higher rate for adults. Raising the minimum wage is bold, offering hope for improved living standards, but also posing risks for businesses. While it could stimulate the economy by increasing consumer spending, it also raises costs for employers, especially small and medium-sized enterprises. The policy's impact on employment, inflation, and the value of higher education is already sparking debate. Some see it as a step toward a fairer, more productive economy. Others worry about unintended consequences. The timing, just weeks before the Chancellor's budget, has fueled national discussion. As the UK prepares for this change, the full effects will unfold over the coming years. The government is betting on a high-wage economy, but the outcome remains uncertain. This decision will shape Britain's economic landscape for years to come. The new £12.70 minimum wage puts the UK among the world's highest wage floors. In US dollars, that's about $16.56 per hour, well above the US federal minimum and higher than France, Germany, Japan, and Canada. The UK's move signals a desire to lead on social fairness and worker protections. Only Australia and New Zealand will have higher minimum wages among major economies. This positions Britain ahead of most peers, but not at the very top. A high minimum wage can attract workers from abroad and serve as a point of national pride. But it also raises challenges for UK businesses competing globally, as higher labor costs can impact pricing and competitiveness. Policymakers must balance social goals with economic realities. The UK's approach is part of a global debate on how minimum wages can address inequality and drive growth. Economists and governments worldwide are watching closely. If the policy succeeds, raising living standards without major disruption, other countries may follow. If it backfires, it could serve as a warning. The UK is now a key case study in the future of work and wages. The world is watching Britain's experiment unfold. Raising the minimum wage brings both promise and risk for the UK economy. One major concern is inflation. Higher wages can lead businesses to raise prices, fueling a general rise in the cost of living. The last wage hike in 2025 was linked by some to increased inflation. Employment is another worry. Classic economics suggests that higher labor costs can lead to fewer jobs, reduced hours, or layoffs. After the previous increase, the UK saw a drop of 115,000 payrolled employees, especially in hospitality and retail. These sectors, with many minimum wage workers and thin margins, are particularly vulnerable. Business owners fear another round of job cuts and closures with the new wage hike. Yet, some economists argue that higher wages boost consumer spending, which can create jobs elsewhere and offset losses. The government is betting that increased demand will outweigh the risks. The relationship between minimum wage, inflation, and employment is complex. There's no simple answer. The coming years will reveal whether the benefits of higher pay outweigh the costs. The stakes are high for workers, businesses, and the broader economy. The UK's economic future hinges on how this policy plays out. The outcome will shape debates on wages for years to come. For many businesses, the minimum wage hike is a source of real anxiety. Labor is a major expense, and a mandated increase means higher payroll costs, not just for the lowest paid, but often for others as well due to the ripple effect. Small and medium-sized enterprises with less financial flexibility are especially exposed. Many are already struggling with high energy bills and supply chain issues. To cope, businesses may raise prices, cut staff, reduce hours, or invest in automation, each with its own risks. The last wage increase, combined with higher payroll taxes, led to job losses and inflationary pressure. Business leaders warn that another sharp rise could have serious consequences. They argue that a high-wage economy must be built sustainably, with support for those expected to deliver it. calls for a more gradual approach are growing louder. The government faces pressure to balance worker welfare with business survival. The next steps will be crucial for the UK's economic health. The rising minimum wage is forcing a rethink of the value of a university degree. With the national living wage offering over $26,000 a year, the gap with graduate starting salaries is shrinking. Many young people now question whether it's worth taking on $45,000 in student debt for a degree that may not offer a clear financial advantage. Graduates in England start repaying loans once they earn above $25,000, effectively reducing their take-home pay below that of some non-graduates. This reality is prompting some to consider entering the workforce or pursuing vocational training instead. A decline in university attendance could have long-term consequences for the UK's knowledge economy. The traditional belief that university is the best route to prosperity is being challenged. The minimum wage hike is sparking a society-wide re-evaluation of higher education's costs and benefits. The shrinking graduate job market is compounding the dilemma for students. Not only are starting salaries being caught up by the minimum wage, but the number of graduate positions is also falling. Major employers have cut graduate hiring for 2 consecutive years, with some sectors, like accountancy, reducing intake even more. Economic uncertainty and rising labor costs are driving companies to scale back recruitment and focus on experienced hires. As a result, many graduates are forced into non-graduate roles, leading to underemployment and wasted skills. The return on investment in higher education is less certain than ever. High debt, stagnant salaries, and fewer opportunities are creating a perfect storm for young people. The UK risks losing the full value of its investment in higher education. The future workforce faces unprecedented challenges. The government is shifting away from a university for all model. The new goal, 2/3 of school leavers in university, further education, or a gold standard apprenticeship by age 25. This broader approach recognizes that academic degrees aren't the only path to success. However, apprenticeship starts have declined by 1/3 since 2015, despite policy efforts like the apprenticeship levy. Key sectors, such as engineering, have seen steep drops in vocational training opportunities. The government faces a tough challenge, promoting vocational routes while making them more attractive and accessible. Rhetoric alone won't deliver results. Fundamental reform is needed. Without a robust vocational sector, many young people may be left with fewer options. The shift in priorities must be matched by real investment and reform. Despite the narrowing pay gap, a university degree still holds long-term value. Over a lifetime, graduates earn significantly more, on average, $280,000 extra for men, and $190,000 for women, even after taxes and loan repayments. Degrees open doors to promotions and higher-paying roles, supporting upward mobility. Demand for university places remains high, with record applications in 2025. Higher education offers more than financial returns. It builds critical thinking, problem-solving, and valuable networks. The benefits extend beyond paychecks, shaping personal and professional growth. While the immediate financial advantage may be less clear, the long-term rewards remain substantial. University remains a worthwhile pursuit for many. The value of higher education endures, even as the job market evolves. The UK's high minimum wage is a bold experiment to tackle low pay and inequality. The policy aims to lift millions out of poverty and create a fairer society. But it brings complex challenges, higher costs for businesses, inflation risks, and tough questions about education's value. Success depends on balancing support for workers with the needs of employers and the economy. The government must invest in both academic and vocational pathways to ensure opportunity for all. The outcome will shape Britain's economic and social fabric for years to come. Whether the policy is a game changer or a troublemaker remains to be seen. The stakes are high for workers, businesses, and the next generation. The UK's future will be defined by how it navigates this new reality.